All attendees are in listen-only mode.
All right, everybody. Good afternoon here. How are we doing today? Are we coming through loud and clear? If I can just get a quick audio and video check. Hey, Saul, how you doing? Wayne? All right. Hey, Mike, how you doing? Thanks, Ron. Okay, audio and video good. All right. Okay, well, good. I hope everybody is having a great trading week so far and taking advantage of some of these crazy moves and all this volatility going on. It's been a interesting few days here with the markets. If you've been trading, you know that. We've got some huge moves starting a couple nights ago here, especially on the U.S. indices. And been some great trading opportunities here with binaries as well as spreads. Just, following these markets and taking some of these great down moves here. So we're going to get rolling today, and I'm going to try to not keep you too long. I know I say that a lot. Then we, get into some good discussion and questions, and we do keep going. But I'll try to not keep you too long today and not keep you from your trading to take advantage of these markets. So we're going to get moving right along here. Let me get our recording going. And okay, welcome to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and this webinar today is sponsored and brought to you by Nadex. Today we're going to talk about short-term versus long-term Nadex binaries, and this is part 2. If you missed last week, you definitely want to check that out. I'm not going to do a ton of review today, but I'll show you here in just a second where you can get, where you can go to check out a recording of last week's webinar, because it'll kind of piece in with this week's webinar and piece it all together for you. We talked last week a little more about, we focused kind of on short-term binaries and talked a little bit about long-term. Today we're going to mainly talk about long-term and, just some pros and cons, reasons that you may or may not want to trade longer term, and just some things to look at. So it's more of a two-part webinar to kind of open your eyes to the, the pros and cons, advantages and disadvantages of each, and help you understand why you might want to take advantage of one over the other based on your particular strategy or system. So let's get our disclosures knocked out here so we can move along. Trading futures, options, or any financial instrument involves risk. It may not be suitable for every investor. Examples here in this webinar are not a recommendation or a solicitation to buy or sell any particular financial instrument offered by Nadex, or any futures, options, bonds, binaries, or spreads, or securities of any kind. Also keep in mind, any trade examples that I might show you today, or any orders that you may see me enter on the Nadex platform, are in no way a recommendation or a trade recommendation or trading advice. Just simply talking about some strategies, simply showing you how to utilize the Nadex platform, how to use the ticket system, enter and exiting orders, strictly just for educational and informational purposes only. And as always, past performance not indicative of future results. So real quick, for those of you that are brand new, hop on over to nadex.com. And just want to go over a couple of things with you here. Let's see here. William, need to turn off music. Are you hearing music, William, in the background? You hearing music coming through on the mic here? Okay, let me know if you're getting something coming through. I don't hear any music here. Is anyone else hearing music come through over the mic here? Mike, no? Ron? No one else is hearing that, William. If you're hearing music come through the mic, do you maybe have some other music going on your computer somewhere that's coming through? No one else here is hearing that. Everyone else says they're good to go. So yeah, I think you have another app running somewhere. He's got some Pandora or something going on. So might want to check some other apps there. Otherwise, if you're having trouble, you can hop off and hop right back in, but everyone else is good to go here. So I might want to check your computer there. Okay, if you have missed any of our past webinars over the last couple weeks or couple months, But in particular, if you missed last week's webinar, part 1 of this, let me show you where to go to get that. Something that I have to give Nadex really great kudos for is Nadex does a great job of giving you guys a ton of free education and free information. If you go over to nadex.com, you can go right here to the Learning Center. Right here under webinars, this will be a list of all upcoming webinars that you can get signed up for and see what future subjects we're going to be covering. But if you go right here to Webinar Archive, okay, and you can go right here to Filter by Presenter. And if you click down and you find us right here, Apex Investing Institute, this will show you all of our past webinars. And you can go through here and go to the next page. You've got several pages of webinars. You can go back to some of these other pages. And, there's even basic webinars. If you're brand new and you don't even know what a binary is, or you don't know what a Nadex spread is, there's basics webinars there where I just kind of handhold you and walk you through the very basics. And then there's other webinars about different strategies and systems, choosing the right binary and spreads, common mistakes not to make, just kind of starting off with a foundation and building step by step to help you out here. Just a whole library of free information about how to trade Nadex binaries and spreads, and some great education. But you'll see right here, this very first one is last week's webinar, short-term versus long-term, part 1. So if anything today is kind of over your head, or you're kind of feeling like, hey, I'm not quite catching this, there's some gaps I'm missing, go back and watch this webinar right here, okay, part 1. The webinar we're on today is being recorded as well, and this is where you will be able to find this webinar here, the recording posted if you want to go back and check them out. So check those out, go through some of the different webinars. Just again, a ton of free education there for you. Another thing I want to point out to you, if you go right here to trading platforms, okay, you can go online to the Nadex trading platform. They even have a mobile app. We're going to talk a little bit about that today. You can access it from your mobile phone. You can access your live or demo account. You can access charts, kind of on the go trading and trade management. Right here, demo trading platform. If you don't have one of these already, go ahead and get one. Even if you already have a live account with Nadex, make sure to sign up and get a demo account. Nadex will give you a free demo account with $25,000 of demo money in it to test and trade on the platform, get used to the platform. All you gotta do is select a username, fill out some quick info, and hit submit, okay? And in just a few moments, you'll get an email from Nadex with a temporary password, and you can use your username and temporary password and log right into the Nadex demo platform. And, the demo platform is just a great place to get familiar with Nadex. Test out, how it works, opening and closing orders, test out any new strategies or systems that you have. If you're trying to test out a new strategy or system, you definitely don't want to go in and use your live money to test something, right? That's a very expensive way to test. That's some very expensive education. Utilize your Nadex platform, your demo platform. Test things out, work out all the kinks, get it mastered in your demo account, get profitable in your demo account before you move over to live. All right, so again, guys, take advantage of the free demo account, take advantage of the free education that Nadex offers on their site there, and, utilize these things as much as you possibly can. So, again, my name is John Skelton. I'm with apexinvesting.com. Apex and Nadex, two complete separate different companies. Nadex is an exchange. Apex, we're an online company of traders helping traders. We're an education company. We've got, our different indicators and live trade rooms and strategies and systems. And we're an education company. A lot of our strategies focus on risk management and probability. That's why we loved the cap risk products with Nadex. We're traders just like you. We're a Nadex education partner. We do these webinars, again, just to help you understand the different products offered by Nadex, some different ways to take advantage of them and trade them. But we're traders just like you. We trade binaries and spreads every single day. I've been with Apex now for about 3 years as head of operations. I've got a background in banking and as a stockbroker. But again, a trader just like you, I trade binary spreads with Nadex, every day myself. We trade them in our live trade rooms. And that's what we're here for, is just to get you some free education. So today, short-term versus long-term. Just going to talk a little bit about all the different binary options offered by Nadex, some of the pros and cons of each, how the values of short-term versus binaries, the values move, and compare some different options. We're not going to be covering some of the basics I showed you there, where to find some of the basics of Nadex binaries in the webinar archives. We also talked last week about the different things that we can trade with binary options, stock index futures, spot forex, commodity futures, economic events, and we did a little bit of a platform review. Now, last week we talked a little more about short term, and we focused a lot on the 5-minute binaries, that expire every 5 minutes, the 20-minute binaries, and we even talked about some of the intraday binaries, they're every 2 hours. Today we're going to focus a little bit more on the longer term binaries, like the dailies that expire at the end of the trading day, or the weeklies that expire the end of the trading week. Now, there's, when it comes to forex, let me just right here to indices binaries. Let's talk about the indices. Let's talk about these bottom four. If we go US Tech 100, US 500, small cap, and Wall Street. These are the four major US stock indices. And the Wall Street 30, that's the derivative of the Dow Jones. So as you see right now, we've got the 2-hour binaries, open at 12, expire at 2, open at 1, expire at 3. Then we've got the dailies that expire at 4:15, Monday through Friday. All right, then we got the weeklies, which expire on Friday. Now, with those, we also have the 20-minute binaries, the shorter term. But when it comes to, so with the stock indices, we have those dailies at 4:15 every day, Monday through Friday. But when it comes to forex binaries, okay, let's just go to the euro dollar, for example. You have the 2-hour binaries, 12 to 2, 1 to 3. You have the weeklies that expire at Friday. But then when it comes to dailies, there's multiple dailies, all right? You've got 3 a.m., 7 a.m., 11 a.m., 3 p.m., 7 p.m., and 11 p.m. So you've got a ton of options there, okay? So when it comes to commodities and stock index binaries, when we talk about dailies there, we have that one daily at the end of the day, all right? Depending on, the time of the day, depends on what market. But when it comes to forex, there are multiple dailies, okay? So again, on forex, we've got our short-term binaries, on the 5-minute binaries on certain forex pairs. We've got our hour, our 2 hours. We've got our weekly. But then when it comes to daily, there's multiple time frames there, okay? So that's a huge plus when it comes to the forex markets, is you can go 5 minutes, you can go an hour out, 2 hours out, into the week, or multiple different time frames throughout the day, okay, spread out hours apart. And that's great because depending on your strategy or system, it really opens up a ton of opportunities for you as far as how much time you're needing, okay? And the other thing that's really great about this is if you're a forex trader and you understand how some of the different forex markets can move, it helps you take advantage of that. A quick example of that would be, when you look at these dailies, what happens right around 3 a.m.? Well, right around 3 a.m. in the morning, you might have, some of the Japanese markets and the Australian markets kind of coming to an end and to a close, and not going to do a whole lot there. And then, yep, Ron said it. Then boom, then London opens up, right? The European sessions opens up. All right. And then around 7 a.m., you've got from 3 a.m. when all those markets open up, about 4 hours later at 7 a.m., maybe some of those big opening moves in London have happened, right? And so you're shooting for, hey, at the European Open, I think market's going up, market's going down. I'm giving myself 4 hours to be right? Well, at 11 a.m., the U.S. markets have had some good time to move. All right, I think things are going to open up, and euro dollar is going to shoot up or shoot down or whatever. You've got some time there. At the end of the day here, 3 p.m., All right, it's kind of coming towards the close of the U.S. session, right? So you've got some, longer term, you've got from 11 a.m. to 3 p.m., you've got 4 hours there, to look ahead for an end of the day move. All right, and then you've got till 7 p.m. right before, the Asian and Australian markets open up, and then when they start moving at, 6, 7, 8 o'clock at night. So then you've got some binaries expired at 11 p.m., giving you a few hours for that move. And then in between there, you've got the 5-minute binaries and the every 2 hours. There's a ton of stuff to choose from there. So just wanted to bring that to your attention that when we talk about dailies with indices or commodities, we're talking about that one at the end of the day. When it comes to forex, you've got multiple dailies. You've got a lot of different options there. Okay, so keep that in mind if you're a forex trader, or even if you're a nighttime or overnight trader. That's something really great to make sure you understand those different options. So that's what we're going to talk about today, is a little more about daily and weekly. I showed everybody this last week. I just want to cover these 2 screenshots real quick just to kind of reset our foundation a little bit. Here's a screenshot of the euro dollar weekly, okay? I took this, I believe, last week on a Thursday. So I took it on Thursday afternoon. The weeklies expire Friday at 3. So at this current time, there was 20 hours and 25 minutes to expiration, okay? So this screenshot was on a Thursday for Friday expiration. Keep in mind, these strikes were available on, earlier in the week as well. So look at this strike right here, 1.0975. All right, we've got 20 hours to expiration. I can buy it for $59.50, or I can sell it for $49.75. Everybody see that? So what I'm trying to kind of get across to you here is, right, on the euro dollar, what were our options? We had 5-minute binaries, we had hourly, the intradays, we had the multiple dailies, they're hours out, but everything from 5 minutes to an hour to 2 hours to 4 hours to a week. So this strike here, 0975, can buy for 59, sell for 49. At the same exact time, like just 30 seconds later, I took this screenshot. Again, look at the strike, 0975. Well, here's a strike for 0974, almost the same exact strike. Look at this. Buy for $95, sell for $87. That's a big difference, isn't it? But look, what is the time frame to expiration? 1 hour and 24 minutes. Okay, so let's go back here. Where is the indicative price? The indicative's at 0981. Okay, so what is this binary contract saying? That the euro dollar will expire greater than 0975. Well, 0975 compared to 0981, the market's already above this strike, isn't it? So this is what we call an in the money binary. Okay, it's already in the money. It's already over. The statement's already true, but I've got 20 hours. So that's a lot of time for the statement to become not true, right? The market's above the strike price right now, but I've got 20 hours to go. It could easily come back the other way. Agreed? Everybody agree with that? 0975 compared to 0981. So the market's, what? 6 ticks in the money, 6 pips in the money? Well, 6 pips in the money, okay, great. But I've got 20 hours. We know the market can do a lot in 20 hours. Okay, so keep that in mind, 0981. Right here, it's still at 0981. But this strike is a lot more. Why? Well, because I've only got an hour and 24 minutes to expiration. So the probability of the market moving against me 6 ticks, 6 pips, I mean, that can happen in an instant, but it's a lot less probability of that happening in an hour and 24 minutes than it is in 20 hours, right? So the closer we get to expiration, and again, if you're not following any of this, go back and watch last week's webinar. It'll all make sense, okay? But what we covered was the closer we get to expiration, the shorter time frame we have to expiration, the quicker a binary is going to move towards its ultimate value of 0 or 100 at expiration, okay? So keep that in mind, and I just want to reset that foundation that the shorter amount of time to expiration, the quicker value we're going to have of move. The longer we have to expiration, it's going to take a little longer to get towards 0 or 100, okay? So let's talk a little bit more about long term. We see in the example above that the longer term move will move much slower, okay? And the longer you have to expiration, the longer it'll take to move. All right, and just another kind of example of that is, let's go back here and let's look at the differences between the strikes here. See, on the shorter term intraday, what are the strikes? 0974 compared to 0978. All right, and look at the values between the two moves here. All right, see the difference there? 78 to 87 there. Now let's look here. Some of these, you've got a little bit bigger value move one strike to the other. But look at here. 74 to 78 is what? It's only 4 pips difference, right? The strikes are only 4 pips wide. But in the weekly, they're 50 pips wide. Okay, so that's another thing we talked about last week. The longer term expiration, not only does it give you more time, okay, but let's just do a quick review. Look at these forex binaries for 5 minutes. How wide are these strikes? Just 5 minutes. 23 to 21. They're 2 ticks wide between the strikes. 2 pips. You see that? 2 pips wide on a 5-minute binary. Okay. Now let's look at the intraday. 54, 50, 46. So the intraday that expire every 2 hours are 4 ticks wide, right? Okay. What about the dailies? The dailies are 1300 to 280 to 260 to 240, 20 ticks wide between the strikes. Okay. And then the weeklies are 50. Okay, so when you're comparing short-term and long-term, we not only have to realize, hey, I've got more time to expiration, and hey, it's going to move slower towards 0 or 100. But you also have to realize that your strikes are much wider. Now, does that just make sense? Because if I'm trading 5-minute binaries, do I want 50 tick strikes every 5 minutes? No, I'm wanting very short-term, small moves. So it makes sense to have 2 pips wide. But if it's a Monday and I want to buy or sell a Friday weekly binary, do I want them to be only 2 ticks difference? No, I know there can be big, huge moves in the market, right? So keep that in mind. Just wanted to kind of recover that not only you're getting a longer time frame, but you're getting bigger strikes, okay, the further out that you go. So keeping that in mind, let's talk about something here and kind of start piecing this together a little bit. And again, if you don't follow some of this, go and check out some of the past webinars, and it'll all come together here. All right, so I want to take a look at something. Let's go to the indices binaries. Let's look at the Wall Street 30. Let me just take a look at something here. I want to find a good example for you. All right, so most of you should know what an in-the-money binary is, right? When we say a binary is in the money, I just want to find kind of the perfect example here real quick. In the money binary, let's try pound yen real quick. Okay, let's take a look here. Pound yen, let's look at this strike right here. This strike is at 143.75, okay? And I can buy it for about $73. All right, so I'm going to tear off this ticket and I'm going to move it right over here for a minute. Now I'm going to go to this right here and tear off this ticket. Okay, so we know at expiration, a binary is either worth 0 or 100, okay? So what is the one thing that we know? If the strike price and the market price are about the same before expiration, that binary is going to be priced at what? About 50 bucks, right, Mike? So at expiration, it's got to be either 0 or 100. So the statement says pound yen will be greater than 143.75. Well, if the market right now was at 143.75, well, it's kind of 50-50, right? It's on the fence. Well, it's right at it. Well, you know, one tick above it and we buy it, it expires profitable. One tick below it and we buy it, it expires not profitable. So one tick makes up or down makes the difference of 0 or 100. So while it's right around that price, it's going to be worth around 50 bucks. Everybody understand that? That's what we call an at-the-money binary. So we know when the strike price is around the same as the market price, it's going to be worth about 50. So why is this one right here priced closer to 80? Because this statement says the pound yen would be greater than 144.09. And where's the market now? 144.25. So it's already greater than that, right? So there's a pretty high probability that this will expire profitable and be worth $100. So it's not valued at 50 because it's not right at the market. The market's already in the money 15 pips. So it's a pretty high probability. So it's priced a little higher. It's not priced at 50, it's priced around 76. Okay, and then if it expires in the money, it'll be worth 100. So everybody understands at the money and everybody understands why this is priced higher than 50, right? Because all we're saying here is it'll be above 09, and right now it's at 24, right? So what we call an in-the-money binary, okay? Kind of use it, you know, we equate it to being kind of like an insurance policy, right? For example, we look at this chart here, and let's just say, okay, I want to buy a binary, and I want to say that the market is going up, and it'll expire up. Well, if I bought a binary down here, saying the market will be above this price, it's already above that price, right? If I bought a binary up here and say, well, the market's going to come up here, well, it might or might not. If I buy a binary down here that's already in the money saying the market will be above here, I'm giving myself some room, right? Some insurance, as it were. Okay? So let's take a look at something. Comparing short-term and long-term. Both of these binaries are right around the same price for me to buy, correct? So I buy this one for $72.50, buy this one for $71. They're about the same price. And either one that expires profitable will be worth $100, right? So I can make around the same amount of money on either one of these, and I'm risking about the same amount on either one of these, correct? But this one expires in an hour and 30 minutes, okay? So remember we talked about how price can move quicker the closer we are to expiration. But we also talked about how the shorter term expirations have closer strikes than the longer term. So for the same price and for about the same risk and reward, what am I getting different? Well, right here, I have an hour, and I only have to be right for an hour and 20 minutes. So there's a part of me that says, hey, I feel pretty good that the market's going to stay where I need it to be for the next hour and 29 minutes. I don't know what's going to happen in more than 24 hours, right? So I've got kind of time on my side here to be right within an hour and 29 minutes because I don't know what's going to happen in 24 hours, right? So that's the one downside, as it were, right? Same risk and reward, I only have to be right for an hour and 20 minutes. But what's the opposite side of that? Well, is this enough time for me to be right? Or do I want longer term to let the market kind of go in my direction? But what's the other kind of pro and con to this? How much, for about the same price and risk, I'm doing an in-the-money binary, which, like we talked about, an in-the-money binary is giving me what? It's giving me insurance, right? Because I'm not sure what the market's going to do, if it's going to kind of teeter up or down. So instead of getting a binary right in here that could just be up or down wrong, I'm getting one way down here to give myself some room. Well, let's look at the difference. 73 compared to 75. Again, about the same risk and reward. This one, I'm saying the market has to be above 09. And where's it at now? It's at 2.4. So what do I have? I have about 15 pips of insurance and cushion room in here, right? Does everybody see that? If I buy this contract, I'm saying the market has to be above 144.09. And right now it's at 144.24. So I've got about 15 pips of room in there for this $75 risk, right? Now, on the longer time frame expiration that has wider strikes, where is this strike at? 143.75 compared to 144.09. This strike is 34 pips lower than this one. Does that make sense? So for about the same risk and reward, I've got 15 pips of insurance here, as it were. Does that make sense? Let me do something here. Pound yen. Let me pull up an actual pound yen chart. Okay. Yep, you could use that as well, Mike. Yep. So does everybody follow me there? If anyone's having a question on this or not quite getting this, make sure to show me here. Okay. All right, now let me pull this up here. Okay, while I'm pulling this chart, Pete says, I made a binary entry to buy at 49 to make 51, but it only paid me 51, not 100. Okay, Pete, here's what's going to happen. All right, if you buy a binary for $49, okay, $49 comes out of your balance in your account, right? If that binary expires out of the money, not profitable, then you don't get that $49 back. That was your risk, right? But if you buy a binary for 49, they take 49 out of your balance and put it on hold, and that binary expires in the money, then it's worth $100. So $100 is put back into your account. And that $100 is, you're getting back the 49 that you put up to make the trade, and then you're getting an additional 51 in profit. Okay? So it's not that, hey, I bought it for 49, now I get my 49 back and I get 100. It's just simply at expiration is worth 0 or it's worth 100. Now you might have paid $2 for it, or you might have paid $82 for it. Okay? And so no matter what you pay for it, at expiration, you're getting 0 or 100. Okay? So guys, take a look here. It's another perfect example. While we were talking and pulling up the chart, take a look at what pound yen just did here. Boom, shot down, right? Okay. Pete, I'll come back to that if you have more questions on it. I just want to show this quick move here. See what pound yen did? Just while we were kind of talking here, shot down. So what just happened to this binary here? Where was it at a minute ago? About $75, right? Now where is it? It's at $26. Okay? It moved a lot, right? The value moved quite a bit. Okay? And why do you think, but look at this. This value only went down $14. This one went down like $35 or $40. Does everybody see that? That was a perfect setup to show you. Why did this one move so much more? Because it's a shorter time to expiration, first of all, right? But also, let's take a look here. Let's take a look here and kind of map this out on the chart to help it make some sense here visually. So I'm going to move this over here. Okay. Where is this strike right here? 144.09. 144.09 is right here. Right? Where was the market at a few minutes ago? When we were looking at this binary and it was priced at 75. Do you remember where the market was? Remember we had like 15 ticks of room, right? It was up here like in the 144.25 range. It was right in here. Remember? About 15 pips insurance. Of now, $143.75 is right here. Whoop. Here. And the market was right here. I didn't know if it was going to go up or go down or stay the same or what was going to happen. But for about the same price, I could have got it in the money binary right here that gave me about 15 ticks of room. Or for $75 weekly, that gave me insurance all the way down here. Everybody see the difference there? Okay, for about the same risk and reward, going longer term, I had a little bit wider room. Now, granted, markets are going long term. Okay, You may not want to go long term. You may want to stay shorter term, okay, because of the volatility. But that's something that you got to look for. And some oh, wait a minute. What else can I get for the same risk reward? Granted, it might be a little longer term, but you have to look at the hourlies, the dailies, and the weeklies. And you can see how you can get much wider room, right? Now, granted, it's Thursday. I'm talking about the weeklies that expire tomorrow. You know, you'll see this on a bigger scale, you know, earlier in the week where you've got such a wide difference. You know, you might have 100 ticks, 100 pips, okay, of room there. I mean, you can even see here on the, let's move this out of the way. We can even see here on the weeklies that, you know, I mean, we probably don't want to go up another strike, but we could. I mean, look at this one, 143.25. So I can get a whole other 50 tick of protection all the way down here, okay, for $81. All right. So, I mean, let's take a quick look now at that. I mean, right here, I can buy this one that is expiring soon for, you know, what is it? The strike is 0.87 and the mark is at 97. So for 73, almost 80 bucks, I can get 10 ticks of protection, right? But on the weekly, for around 80 bucks, I can get 75 ticks of protection. Everybody see that? For about the same risk and reward, 10 ticks of protection compared to 75 ticks. All right. So that's the other thing you really have to keep in mind when it comes to short term versus long term is the long term, and you also saw there, okay, because this is the other point I want to make. The long-term binaries are not going to move as quickly in your favor, okay, towards $100. You know, if you buy something for 50 and you want to get out when it gets worth 80 and take your $30. Well, a longer-term binary is not going to move $30 or $40 in value as quick as a short-term will. Okay, so you're not going to profit as quick with your longer-term binaries. But what's the reverse side of that? You're not going to lose as quick either. We saw that example right here, right? Because when that market moved, this $75 binary went down to like 30 something, right? This only went down like 15 bucks, right? So it's a twofold pro and con there. Longer term binaries aren't going to move in your direction as quick in value, but they're not going to go against you as quick either. Okay, so maybe you don't like the anxiety and stress of short-term binaries. Maybe you just can't handle every 5 minutes an expiration in, you know, 0 or 100. Maybe you can't handle the heart racing, you know, and you want longer-term trades. Well, you can do that with the dailies or with the hour or with the weeklies. You can trade longer term and manage that trade, okay? And you just have to, you know, or we talked last week about hey, maybe you're a part-time trader. Maybe you have a full-time job. You don't have a lot of time to trade, so the short-term binaries are great for you, just quick in and out. And maybe that's the case, okay? Or maybe, hey, I have a full-time job. I'm new to trading. I don't have a lot of time to trade. And I don't like the stress of the short term. I want to trade longer-term binaries. I want to give myself 7, 8, 12 hours, 24 hours, several days for the trade to go my direction. And I can just, you know, check in on it and manage the trade. I can use my mobile app and manage it at work or on lunch break and keep an eye on those trades. And even if the market moves 75 pips, okay? I mean, let me ask you a question here. We saw the market move a little bit. And let's see here, 144.04. Let's see here, 3 p.m. Okay, question. This binary contract right here. No, this one. Okay. If I were to buy this binary right here for 88 bucks, where does the strike price? 87. Where's the market now? 002. So what is that? 15 ticks, right? If the market went against me 15 pips in the next 14 minutes, if it went against me 15 pips, how much would I lose? I buy it for $84.75. It goes against me now 13 pips. How much do I lose? Bam, 84 bucks. Because of 13 or 14 pips, right? Okay. Who can answer this little somewhat trick question? We talked about it earlier. This binary right here, if it goes against me 25 pips, not just 14 or 15, but if it goes against me 25 pips, the market was at 144. If it goes against me 25 pips and it comes down to 143.75 before expiration, approximately how much am I going to lose? Or how much will I be down in my value right now? It'll be worth about 50 bucks, right? Yeah, Marvino, right. I'll lose about 15 bucks. Because what do we know? When the strike price is the same as the current market price, the binary is valued around 50 bucks. So you see what I mean? Yeah, Ron, you had it right. I knew where you're going with that. But does that make sense, though? So do you see where shorter term to expiration, the value is going to move a lot quicker based on some movement? But hey, you know, I mean, look at this binary here. Strike price is 97. Now we're at 91. I've got 6 ticks to worry about in 11 minutes. That's going to make the difference of $0 or $100 and losing 40 or making 70 and 60. Whoa, there's a little bit of stress to that. Watching every little tick, every second that goes by. I'm watching this clock, and you know what I'm hearing and feeling? My heart doing this. Right? Boom, 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 boom. I'm freaking out about every little thing. But I'm freaking out about every little tick. But when I get a 25 pip move against me, boom. All right, and I go from $65 down to 50. I can give a little time to come back. I'm not stressing as much, right? Because I'm a longer term trader. And as a longer term trader, if that's what I am, you know, maybe I'm looking at, you know, I'm not looking at little bitty tick charts. Maybe I'm looking at weekly charts, seeing what is the overall trend direction. What has the market been doing over the last several weeks and months? Okay, it's been going up overall, but the market doesn't just shoot straight up, does it? Comes up and it pulls down, comes up and it pulls down, comes up and levels off, comes up and levels off. I know that's how the market works, right? I know that there's retraces. So if I'm convinced that the market is in an uptrend, well, or in a downtrend, okay, so the market's in a downtrend and it pulls back up a little bit. Am I freaking out trying to get out of all my positions because it went 15, 20, 25 ticks against me? Not necessarily, because I'm expecting a pullback and then the market comes back down and then a pullback and it comes back down. That's part of the longer term trading. I'm not trading real quick expirations needing to know the immediate direction of the market. So maybe I'm looking at weekly charts, I'm looking at hourly charts, but then I'm also paying attention to, you know, what's going on, I want to see the overall big moves, but what's going on in the shorter term. I'm also maybe looking at a 10-minute chart as well, okay? And I'm seeing it even more clear. Okay, the market's coming down, coming down. Now, if I'm right here and I've got a binary that it's going to expire at, you know, 10 o'clock, I'm really freaking out about this little pullback up, right? Man, because that could just knock me out of my whole trade. But if I'm trading a daily binary or a weekly binary, and I'm seeing, and I know that the trend is going down, well, as the market is coming down, it does a little pullback here. Am I freaking out? No, because it didn't hit my value that hard, right? And I'm expecting it to keep going down. It comes down, it pulls back a little more. Okay, comes down, pulls back a little more, comes down, pulls back a little more. I'm not freaking out and my heart's not going crazy over every little pullback because I've got time to follow that trend down. Okay, does that make sense to everyone? The difference there of kind of shorter term versus term. Okay, and how the values can move differently the closer to expiration you are. How you've got wider strikes and, you know, more insurance going with those longer term trades. But again, we also know what the markets have done longer term. I mean, this week here, you know, what were all the stock indices doing? They were going up and they're making all-time highs and, oh, great. And then what have they done the last few days? Just shot down. So a lot can happen both ways with short-term and long-term. So I'm not saying either one is right or wrong. You got to find what's best for you, what fits kind of trading needs and personality. Okay, so that was kind of part 2 here of short-term versus long-term. Once again, if you didn't catch last week's, go back and watch that as well and kind of piece the two together. Like I said, last week we really focused on short-term. This week is giving you a little more idea about long-term and looking at those longer-term directions of the trend of the market and kind of the different charts you'll need to use and so on. All right. What we're going to do here in the next week or two, our next webinar, we're kind of going to reset the foundation and go back to the basics. And we're going to talk about kind of the basics 101 of Nadex binaries. So for those of you that are brand new, if any of this today was kind of over your head here, definitely join us on the next webinar here. We're going to kind of start back from the basics and you know, kind of walk you through and handhold you through the basics of Nadex binaries. Okay, so guys, thank you so much for joining us today. I appreciate your time and your great input and questions. Hope everybody's had a great trading week, and you know, hope everybody continues to take advantage of these great moves of the market by utilizing these capped risk products with Nadex.